Hi, I'm Scott Starratt with Starratt Wealth Management, a part of Canaccord Genuity Wealth Management. Mark Twain once said, "History doesn't repeat itself, but it often rhymes." And so I wanted to share an article that I read from the Globe and Mail here recently that described something that happened 135 years ago in 1890 and how it may rhyme with what we're experiencing right now. Back then, the US instituted what's called the McKinley Tariff Act. What it basically did was put 50% tariffs on all Canadian exports into the US. Sounds very familiar, doesn't it? And the intent behind this was to force Canada to actually become part of the US, among a bunch of other things. So, what was the impact of this at that time? And again, times are different, but I think there is similarity or a rhyme. And what ended up happening, eventually those tariffs went away. It took quite a while. It took about 10 years for them to all go away completely and for there to be a complete reset in the way that the US actually taxes their citizens or the people who they trade with. But what it did for Canada was 5 years later, the exports to the United States dropped by 50%. Pretty, that's something that we could definitely expect. But what was quite interesting was exports to other markets more than doubled. As a matter of fact, during those 5 years, exports overall actually rose 20%. And what I take away from this is that although we're going to go potentially through a lot of pain here over the next little bit, it may be in the long term not an overly bad thing. Maybe I'm looking a little bit too optimistic at it, but I do think that with all the volatility that we've experienced through for the start of the year, and in particular in the month of March, that going forward, I think there is some positivity that we can glean from this if we do believe that history does rhyme. March, as I said, was a very volatile month. There were periods of time where everything looked horrible. Then there were other periods of time that everything looked good. I don't think we really know and I don't think anyone really knows for that point, what's going on in the Trump administration's heads. I've heard everything from, that this is all negotiating ploy, that one of the reasons that they want to do this is to get control or have better access to our water, our critical minerals and energy. It could be all of these things. We just at this point don't know, and I don't think anyone's going to know. But what we can do is to make investment decisions based upon the facts and not based upon what our feelings are or what we think is going to happen. So as you recall back in November, and I've said this, I guess, every month probably for the last 5, but back in November, we did take money off the table. We did reduce exposure to stocks in portfolios in order to make sure that we were in a situation where if there was some volatility as Trump became inaugurated, or even up until that point, that we had some dry powder available to take advantage of opportunities. And what ended up happening, of course, is we ended up for the start of the year having a little bit of a bumpy start. February was a strong month, but January, sorry, was a negative month for the most part for markets. February was a stronger month, and then March pretty well overall when I consider what Bloomberg is saying about the returns in the United States, in Europe, Canada, et cetera, that there were very negative months or very negative times during the month of March. And so client positioning right now is still quite balanced. We do feel that we want to keep some money available in case things get quite negative, that we could take advantage of the opportunities. I think one of the things right now that continue to be an issue is, are the tariffs going to cause inflation or a pickup, I should say, in inflation in North America? Too early to tell. It's also too early to tell whether the tariffs are going to cause recessions, whether it's a global recession or whether it's just recessions in Canada or even the US. A lot of volatility, and I think the volatility continues. I was listening to Kevin McCready, who is the CIO of AGF Funds, and one of the things he felt was that negotiating will start on April the 3rd, pardon me, April the 2nd. And the negotiations will probably last until the summer. And so the expectation in his mind is that we could have some resolution to things in the summer. Now, again, resolution doesn't necessarily mean that all the tariffs are going to go away, but the market really looks at this uncertainty as being the biggest problem, not that there aren't any tariffs, because you can deal with that. You can model out, or you can change company behavior, or you can change the way you're running the company in various ways to either avoid or to try to minimize tariffs. But when you don't know what the tariffs are going to be, or what they're going to be on, or whether they even apply to your company, very, very difficult for senior managers of these companies to make decisions. And that's the same as any small or mid company, but it's also, think of the car companies, think of the technology companies, think of any company that does trade in the US, which is the majority of companies in the world. So we are in a situation where we are definitely watching markets to make sure that we are well positioned. As of this point, we feel that we are very balanced, like I said, and well positioned, but we're more than comfortable to take advantage of any opportunities if they do come up. Other items that I want to touch base on are Canaccord has started with a few value add features, posts and articles that I'll be sharing here over the next month or so. Please do get back to us if it is something that you want to receive on a regular basis, if you think it is of good value. A couple of the things I'm going to send out are one of the things from our key market strategist and what his thoughts are for the overall global markets. The other thing is a political piece that is a podcast from one of our vice chairmen, who's going to talk about what the political implications are in Canada and the US as we're into a Canadian election right now, and as the US continues to be very volatile in our politics. It's quite an interesting piece, and please, if you do want to receive it on a regular basis, get back to us. Tax time, we are past the March 31st deadline for all companies to submit their tax forms to their clients. And so all the companies have hit this. Now, of course, that doesn't mean that you get them on March the 31st, but we do have, for the most part, I think we may be missing one or two at this point, but we do have forms, the tax forms for all the companies now. So Alex and Angela have been and will be reaching out over the coming days to make sure that you have all the tax forms required for you to file. If you do have any questions, or you do feel you're missing any tax form from your checklist, please do reach out to us, as like I said, we probably do have a copy of it. That's about it for now. This has been a little bit of a longer chat. Jim, myself, Angela, and Alex are around if you do want to talk about this more. And Jim and myself will be reaching out either as part of our regular review, or reaching out in general to touch base upon what the portfolios are doing relative to the market here in the last few months.